Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on half-year 2023 economic and financial market review, outlook, and recommendations. The year 2023 started on a shaky note on the back of a higher inflation rate and slower economic growth in 2022. This prompted global central banks to raise interest rates to rein in inflation, which led to higher borrowing costs and weak consumer spending. For instance, the US Fed raised interest rates 3 times in the first half of 2023 from 4.5% last year to 5.25%. However, the moderation in the energy prices, an average of $74.86 in H1 2023 from an average of $94.53 in 2022, in the first half of 2023 supported a better than expected growth rate. The US stock market performed positively despite numerous bottlenecks, ranging from the banking sector crisis to recurring concerns about the economy. The S&P and Nasdaq composite indices have gained 15.9% and 31.7% respectively so far in 2023. On the domestic front, the first half of the year was predominantly occupied with electioneering, which created uncertainties. However, there is now more clarity after the successful conclusion of the general elections, specifically due to the major policy announcements by the new administration. Nigeria's economy grew by 2.31% year-on-year in real terms in the first quarter of 2023, showing sustained positive growth for the 10th consecutive quarter. However, growth was slower compared to 3.11% year-on-year in Q1 2022 and 3.52% year-on-year in Q4 2022. The moderation in the growth was due to CBN's Naira redesign policy and other restrictions placed on accessing banknotes. Despite the cash crunch, the inflation rate rose consecutively in the first 5 months of 2023 from 21.82% year-on-year in January 2023 to 22.41% year-on-year in May 2023. Following the collapse of the various FX segments in the investors and exporters I&E window and the introduction of willing buyer, willing seller model, the Naira depreciated by 40% or 307 Naira 75 kobo to 769 Naira 25 kobo per dollar as of June 30, 2023, from 461 Naira 50 kobo per dollar as of December 30, 2022. However, at the parallel stroke Aboki markets, the Naira depreciated by 4.7% or 36 Naira year to date from 736 Naira per dollar to 772 Naira per dollar as of the end of June 30, 2023. This has reduced the spread between the official and parallel markets to around 3 Naira per dollar from 274 Naira 50 kobo per dollar at the beginning of the year. The Monetary Policy Committee (MPC) of the Central Bank of Nigeria (CBN) raised the benchmark rates 3 times to 18.5% in May 2023 from 16.5% in December 2022, although this had little influence on market rates. The average T-bills interest rate increased marginally by 0.99 percent points to 6.35% at the end of June 2023 from 5.36% as of December 2022. The negative real return remained wide due to rising inflation rate. In the federal government bonds market, average yields dipped marginally due to buying pressure at the end of June 2023 to 13.3% from 13.5% as of December 30, 2022. Similarly, federal government euro bond yields declined by 1.13% to 10.8% as of June 30, 2023. We also saw improved activities in the commercial paper market, with the total value of listed CPs on the FMDQ increasing by 200 billion naira to 1.6 trillion naira. The Nigerian stock market ranked amongst the best performing stock markets in the world, with a year-to-date performance of 19% due to the recent policy moves by the President Tinubu administration. The oil and gas, banking and consumer goods sectors recorded a whopping gain of 67.8%, 54.6% and 51.9% year-to-date respectively. We recommend assessing your savings and investment strategy relative to your set goals for the year. As stated in our podcast at the beginning of the year, celebrate your successes if you have met or surpassed your target. However, you need to catch up. You can increase your savings rate as well as reassess your portfolio position. Our expectations for the second half of 2023. 1. Global economy. We expect slower economic growth in the second half of the year due to the impact of higher interest rates brought by elevated inflation. We also expect the support growth from lower energy prices to fade out. 2. Nigeria. A. Growth rate. We expect Nigeria to sustain its positive momentum for the rest of the year, although this is likely to be slower due to the short-term impact of subsidy removals and exchange rate depreciation. We expect an improvement in the oil sector as better security supports oil production, which would boost growth towards the end of the year. Inflation rate. The inflation rate in Nigeria is expected to sustain its upward movement due to pressures from higher petrol prices, upward review of electricity tariff, and depreciation of the naira. The inflation rate is projected to stay at about 25% in the next few months. C. Exchange rate. We expect the naira to appreciate before the end of the year to below 700 naira per dollar if the CBN is able to sustain supply and clear FX backlogs. Also, improved FX inflow from Nigerians in the diaspora, better remittance from NNPC, and higher crude oil prices due to a reduction in oil theft should increase FX inflow to the economy. The federal government of Nigeria may raise euro bonds before the end of the year if the global interest rate environment improves. D. Interest rates. While higher interest rates are needed to attract foreign portfolio investors, FPIs, the increased liquidity in the financial system due to CBN's current policies may keep interest rate low. Also, lower borrowings by the federal government due to the removal of fuel subsidy and currency depreciation could potentially support low interest rates. E. Stock market. We expect the Nigerian stock market to sustain its positive form for the rest of the year if the FX policy moves are sustained and confidence improves. We expect the FPIs and PFAs to increase their activities in the stock market. Investors should have a long-term horizon due to higher prices. Now, what should you do? A. Seek higher yielding fixed income investments. Rather than investing in T-bills, you can increase your risk level by investing more in commercial papers and structured fixed income products from SEC licensed and reputable investment firms. We expect more companies to take advantage of the fixed income market to raise commercial papers. Please ensure to review the credit rating of the company before investing. B. Increase your savings rate. While the inflation rate is reducing the real value of your savings, you can reduce your expenses if possible and create other income streams like monetizing your skills to save more. This allows you to invest more and earn more income to cover the inflation gap. C. Have a long-term view of dollar-denominated assets. Given the projected appreciation of the naira, you should have a long-term view when converting naira to dollars to invest. However, you can invest in dollars if you earn or have dollars. Investments to consider include dollar fixed income mutual funds and dollar savings. Also, Nigerian euro bonds still present long-term investment opportunities. Lastly, the US stock market provides long-term opportunities in fundamentally strong companies for investors with a higher risk appetite. All these provide a hedge against any currency adjustments. E. Invest in Nigerian stock and equity mutual funds. While there have been a substantial price appreciation in the past few weeks, there is still potential for more upside if the recent policy reforms are sustained and followed up with appropriate actions. However, investors should have a long-term view towards the market. Alternatively, you can purchase equity mutual funds to participate in the stock market. B. Seek knowledge. Proverbs 15:22 NLT says, plans go wrong for lack of advice. Many advisors bring success. You should engage your investment professionals more to assist in optimizing your investments. You should also read and listen to investment podcasts to garner more understanding about investments, as well as to keep up to date with the markets. In the last 3 years, we have produced 180 podcasts on our YouTube channel that have simplified some of the investment opportunities mentioned and keep you abreast of these opportunities. Kindly listen for more insights. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.